Welcome back. We're a few minutes away from the opening bell on Wall Street, but let's dig into Intel first. The chipmaker issued a warning on profits for the second straight quarter, slashing fiscal year guidance. This came after the company reported mixed earnings on the top and bottom lines here. Let's get right to the results and the guidance. So missed on sales. Also, for the fourth quarter, taking down the sales guidance by about $1 billion versus Wall Street consensus estimates. But yeah, you're not seeing Intel shares fall off the map. And Julie, we talked a little bit about this in our morning meeting. It might be these cost reduction targets by Intel. They are eye-popping. 8 to 10 billion. Intel is looking to remove from its operating cost line by 2025. That's a lot of cost.
It's a lot of the analysts are really mixed on this about how effective this is going to be. Quite interesting here. KeyBank, for example, says they struggle to see how this is going to allow Intel to close the competitive gap with AMD or Taiwan Semi and execute over the longer term. Basically, Evercore says they're not expecting to see external signs of success for at least the next 6 to 12 months. On the flip side, Jeffrey says this could help shift the company culture to a leaner, more efficient mindset. So it's sort of a little bit mixed here as to how effective people think these cost cuts are going to be.
Yeah, burnout as a strategy has always worked. I mean, when you think about the near-term headwinds that they're seeing for some of the long-term targets that they're putting out there. You mentioned the $10 billion in savings by the end of 2025. But right now, you've got waning PC demand. You've also got a company that's going through its own shift in how it's able to produce chips and spending billions of dollars in order to make that happen and break ground on new factories. And so, sure, it's going to be looking across the headcount and what's necessary to make that actually come to fruition, but also what are you going to do as well on the other side to really generate demand? And that's kind of the era, especially for the companies that are looking to make sure that they can not only sustain their baseline right now, it's demand generation. And a lot of that typically would have leaned on marketing in the past, but some of those marketing budgets are also being contracted as well. And this is not necessarily a marketing solution that they can just put out there on the table.
What's also interesting, Pat Gelsinger, who I know you're going to talk to later, had said that 3 months ago, he said that was the worst things we're going to get. And now not. Now he's acknowledging things are probably going to keep getting
Yeah, be mindful. If you're out there trading in Intel and for some reason you like this quarter, keep in mind, a couple months ago when Intel came out and originally shocked the market with that guidance, what did we see over the next few weeks? We saw a warning from NVIDIA. Then we saw a warning from AMD. Now, those are two companies that I would argue are not cutting expenses at all or not at the same rate as Intel. So I would just be careful because those quarters could equally be as weak as what Intel put up here.
Yeah.